Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 5 best growth stocks to buy right now. For more videos like this one and stock analysis, remember to go and smash that like button right now, comment which of these stocks is your favorite down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. So these stocks are not in any particular order, but we're going to start off with one of my favorites, which is Sofi Technologies SOFI stock. Sofi Technologies is a fintech company or a financial technology company that operates as a digital bank. Sofi Technologies saves a lot of money by not operating their own brand of brick and mortar bank branches. However, they do offer their consumers an all-in-one inclusive digital app which gives them anything they could possibly need in terms of financial services and or financial products. Currently, the Sofi stock price trades for around $6.29, while investors think that the company is worth anywhere between $7 to $11 over the next year. Now, the reason I am a huge fan of Sofi Technologies is that they are internally self-sufficient. And what do I mean by that? Sofi Technologies has had 3 major acquisitions in the last couple of years. And those acquisitions would be with Pacific Bancorp, which made them their own bank because they acquired a bank charter. Then we have Technisys and Galileo, which work synergistically together, where Sofi Technologies doesn't need to hire any third parties to do any front-end or back-end processing, including underwriting, because they already have artificial intelligence technology that does the underwriting for them, which basically determines whether or not somebody is qualified for a loan, how much that loan could be, and what the interest rate is going to be on that loan. They offer a plethora of various loans, from mortgages, car loans, personal loans, and student loan refinancing, along with other financial services and products such as credit cards, debit cards, savings accounts, and much more. We also have a huge catalyst coming up for Sofi Technologies because Wall Street anticipates that they are going to bring in a year-over-year increase in both their earnings and their revenues. And if Sofi Technologies actually brings in an earnings beat and a revenue beat, this could reflect very positively in the SOFI stock price. On the other hand, if they miss their earnings or revenue projections by experts, this could move the SOFI stock lower. But what I really like about Sofi Technologies is that they are scaling at an absurdly interesting rate, and this is what I mean by that. Regarding their earnings per share, or EPS, they are supposed to post a quarterly loss of 12 cents per share in their upcoming earnings report, which would represent a change of around a 75% increase, which is astonishing. Revenues are also anticipated to be brought in at a financial metric of $345.99 million, which would represent them scaling the revenue at almost 50% compared to the same quarter from a year ago. And if you can identify a company that is growing at a 30% CAGR, which is their compounding annual growth rate in terms of their revenues and other financial metrics, this is absolutely a phenomenal growth company, which is why Sofi Technologies is on this list. Now, the bottom line for Sofi Technologies is that they're extremely innovative in the fintech space, and based upon their future financial metrics, it's very safe to buy now and hold for the long term, because eventually the stock price is going to scale up and the company is going to be worth substantially more than it is now. So remember to look out for some catalysts, such as the student loan moratorium ending, which is going to be phenomenal. Either that's going to end at the end of August or sometime in the first half of 2023, and that's also going to operate as a fantastic catalyst for this particular company. Next, we're going to talk about another favorite of mine in terms of their growth and technology, and that is ASML stock, which currently trades for close to $553 per share, while stock experts currently think that the company is undervalued right now because their stock price should be worth anywhere between $575 and $1,030 over the next 12 months. This is basically a Dutch semiconductor company that sells various equipment to semiconductor manufacturers, and recently the ASML stock price has absolutely surged by around 19% due to the recent catalyst, which we will talk about in our next article. The company literally helps the world's most innovative semiconductor foundries to produce chips that are used in a multitude of various products. So this is literally one of those cornerstone companies that are going to be able to do fantastic things in the future. And this is one of those companies that is not only going to be a good investment in the short term right now, but it's also going to be a fantastic long-term investment to hold on to. For instance, right now the ASML stock price is trading for close to 41 times their trailing earnings, which is really not that bad, while their price to sales ratio is around a 12. Now, to put that into perspective, the last company company we looked at, which was Sofi Technologies, currently trades at a price to sales ratio of around a 4. And ideally, we would want these PS ratios to be as low as possible, but because we are talking about growth stocks, a high PS ratio can actually signify that investors believe that the company will scale into this ratio into the future, which means this company is packed with future growth potential. I also want to say that it's trading at a substantial discount than what it was trading at last year, because last year it was trading at 53 times their earnings, and like we said earlier, now it's only trading at 41 times, which is a phenomenal improvement. And then for their PS ratio, or their price to sales ratio, which is where their market cap is compared to the amount of sales and revenues that they are bringing in, used to be 16 times, and now it's only 12 times. So clearly, this company is a better investment now than it was back then. I also want to point out that the forward PE ratio, or price to earnings ratio, is 32, which is even better than what it's trading at right now. And I also want to bring to your attention that over the next 5 years, this company has a CAGR for their sales and revenue of 30%. And just like we said for the last company, a 30% or above is absolutely phenomenal, especially if you can keep this momentum up for the next 5 years. I also want to point out some of ASML's main customers, which are Intel, Taiwan Semiconductor Manufacturing, and Samsung, among many others. So this company is literally built for long-term growth, and I think that this company is a fantastic buying opportunity right now. My cornerstone thesis for this company is that the demand for semiconductors and other semiconductor companies are increasing, and investors should really hop on this bandwagon before it's too late, especially because this particular company basically has a monopoly over the EUV lithography machines that are used to make smaller, powerful, and more efficient chips. So if you want to buy a company that is absolutely charged for future growth, then ASML should be at the top of your list. I also want to point out that ASML also had a recent earnings report, which absolutely invigorated investors. And lastly for this company, before we move on to the next company, I want to say why this particular author thinks that ASML Holdings is actually recession-proof, which is absolutely phenomenal in my opinion. So even if the stock market does decide to go into a full-blown recession, this company is still set to bring investors value. The main reason for this is that even during a time of a recession, semiconductors are going to be in high demand because of the plethora of other products that use semiconductors. So even though those individual products may have a demand problem, semiconductors definitely will not, according to this article. And to show you how bullish I am for this particular company, I do want to touch on what they brought in for their earnings. So they recently reported their Q2 earnings, which solidified their place as the market leader in terms of lithography equipment to make semiconductor chips. And personally, I think right now the ASML stock is trading at a decent discount right now, along with many other technology and growth companies. According to analysts, they say that the top of the line estimates for their revenues came in above management's original guidance, where their revenue scaled up to 5.43 billion euros, which would represent a 35% year-over-year increase, again beating their 30% CAGR that they predicted for the next 5 years. Also, their earnings per share came in at around 3.54 euros, which would equate to around a 40% increase year over year, again, which is absolutely astonishing. And currently, right now, the euro and the dollar are actually worth basically the same, which is pretty shocking, so you can just convert those straight to dollars if you would like. This particular author goes way more in depth about the true value of this company and why the company is set to absolutely explode, but for this general view of the company, I just think that this company is absolutely set for future growth potential. And I really do mean that honestly, but if you want more information, as always, I link my resources in the description box down below if you would like to read any of these full articles so you can get a more informed view instead of just me summarizing what these articles say about the company. And that concludes part 1 of our top stocks to buy now video. For more growth stocks with amazing future growth potential, go and watch part 2, which is linked in the description box of this video, so I will see you over there.